Welcome back to Pulse of Silver, the channel where we break down the biggest stories, market shocks, and hidden signals shaping the future of silver. Today's topic is massive because the COMEX silver market is suddenly facing a crisis that has shocked traders, analysts, and even longtime precious metals investors around the world. What if I told you that something is happening inside the silver market right now that could completely change the future price of silver forever? What if the system that controls silver pricing is starting to crack under pressure, and most investors still have no idea what's going on behind the scenes? Over the last few weeks, strange activity inside the COMEX silver market has started raising serious concerns. Inventories are moving fast, physical silver demand is increasing again, and more investors are asking one important question: does the paper silver market still have enough real silver behind it? For years, critics of the COMEX system have warned that too much paper silver has been traded compared to the amount of physical silver actually available. Most people ignored those warnings because the system kept functioning. But now, new pressure is building, and the market is beginning to react. To understand why this matters, we first need to understand what COMEX actually is. COMEX is one of the largest futures exchanges in the world where silver contracts are traded daily. Most of these contracts are settled in cash, not physical metal. That means traders buy and sell silver on paper without ever touching real silver bars. In normal market conditions, this system works because only a small percentage of investors ask for physical delivery. But problems begin when too many people suddenly want the actual metal instead of paper contracts. That is exactly why recent delivery trends are making headlines. Large investors and institutions have reportedly been standing for physical delivery in unusually high amounts. At the same time, silver inventories inside COMEX warehouses have been moving lower. This combination creates fear, because if demand for physical silver continues rising while supply remains tight, the exchange could face a serious shortage problem. Now here's where things get even more interesting. Industrial demand for silver has exploded over the past few years. Silver is no longer just a precious metal used for coins and jewelry. It has become one of the most important industrial metals in the modern economy. Solar panels, electric vehicles, military technology, AI infrastructure, and advanced electronics all depend heavily on silver. Unlike gold, much of the silver used in industry gets consumed and is difficult to recycle quickly. That means the world keeps needing more silver every single year. At the same time, mining production has not kept pace with growing demand. Many silver mines are struggling with higher costs, lower ore grades, and political uncertainty. New discoveries are becoming harder to find, and bringing new mines online can take years. This creates a dangerous setup for the market because rising industrial demand is colliding with limited physical supply. Now investors are beginning to notice something important. If silver becomes harder to obtain physically, then the paper pricing system could come under enormous pressure. That possibility is what has many analysts talking about a potential COMEX silver crisis. The fear is not necessarily that the exchange disappears overnight, but that confidence in paper silver contracts starts weakening. And once confidence disappears in any financial market, things can move very fast. The silver market has always been known for sudden explosive moves. Historically, silver tends to stay quiet for long periods before making massive price jumps in very short periods of time. Some analysts believe the current situation could become the perfect setup for another historic silver breakout. And if that happens, today's prices may eventually look unbelievably cheap in hindsight. But this story is much bigger than just silver prices. What's happening right now could also expose deeper problems in the global financial system itself. And that's exactly what we're going to uncover in the next part of this video. The reason this COMEX silver crisis is creating so much fear is because the silver market operates on a system built heavily on leverage and trust. For decades, paper contracts have allowed massive amounts of silver to be traded far beyond the amount of physical metal sitting inside vaults. As long as most traders settle in cash, the system can continue operating smoothly. But when investors begin demanding physical delivery at the same time, pressure quickly starts building beneath the surface. This is where things become very important for ordinary investors to understand. Many people assume that buying a silver contract means there is a real silver bar immediately waiting for them somewhere. But the truth is much more complicated. In reality, the futures market functions more like a financial betting system where huge amounts of contracts are exchanged every day without physical movement of metal. Critics argue that this creates an artificial supply of silver on paper, which can suppress prices and disconnect the market from actual physical demand. Now imagine what happens if confidence in that paper system suddenly weakens. Investors could rush toward physical silver all at once. If too many delivery requests arrive at the same time, the exchange could face serious stress trying to meet obligations. This is why some analysts believe the current inventory movements are being watched so closely by major banks and institutional traders. At the same time, global economic uncertainty is making the situation even more dangerous. Inflation remains a major concern across many countries. Government debt levels continue rising. Central banks around the world are trapped between fighting inflation and preventing economic slowdowns. Investors are becoming increasingly nervous about the future of fiat currencies and financial markets. During times like these, precious metals usually attract strong attention as safe haven assets. Silver is especially unique because it behaves both as an industrial metal and a monetary metal. When industrial demand rises while investors simultaneously seek safety, silver can experience powerful price momentum. That dual demand is one reason many analysts believe silver may be entering one of the strongest long-term setups in decades. But there is another factor making this situation even more explosive. Retail investors are becoming more educated than ever before. Social media, independent analysts, and online communities have helped spread awareness about how the silver market operates. More people are now choosing to buy physical silver directly instead of relying only on paper products. Coin dealers in many regions have already reported periods of tight supply and higher premiums on physical silver products. This growing disconnect between paper prices and physical demand is what worries many market observers. If physical silver becomes difficult to source while paper prices remain artificially low, eventually something must adjust. Either physical demand cools down dramatically or prices move sharply higher to balance supply and demand again. Some analysts compare the current silver situation to pressure building inside a volcano. For years, the market absorbed stress quietly beneath the surface. But now cracks are beginning to appear. Delivery numbers, warehouse movements, industrial demand, geopolitical uncertainty, and investor distrust are all combining at the same time. That combination could create conditions for a major market event. And here's the scary part for short sellers. Silver markets are relatively small compared to other global asset markets. That means it does not take enormous amounts of capital to move prices aggressively once momentum begins. If institutional money starts flowing heavily into silver while physical inventories remain tight, the upside could become extremely violent. Some experts believe this could eventually trigger what's known as a short squeeze in silver. A short squeeze happens when traders betting against higher prices are forced to buy back positions quickly as prices rise. That panic buying can accelerate price spikes even further. And because silver has a long history of volatility, moves can happen much faster than most people expect. Right now, the market appears calm on the surface. But underneath, pressure continues building. And in the next part, we're going to look at why some major analysts believe this crisis may only be the beginning of a much larger silver shock. One of the biggest reasons analysts are paying close attention to silver right now is because the world may be entering a period where physical assets become far more important than financial promises. For years, markets have depended heavily on debt, derivatives, and paper-based systems. But during times of economic instability, investors often begin questioning whether those paper systems are truly secure. That shift in psychology is critical because markets are driven not only by numbers, but also by confidence. Right now, confidence in many financial systems is being tested. Banks are facing pressure from rising interest rates. Governments continue printing massive amounts of money to support economies burdened by debt. Inflation has damaged purchasing power across the world. Many investors are beginning to realize that holding cash alone may not protect long-term wealth. This environment naturally pushes attention toward hard assets like gold and silver. But silver may hold an even more interesting position than gold because of its industrial importance. The green energy transition is dramatically increasing global silver demand. Solar technology alone consumes enormous amounts of silver due to its unmatched electrical conductivity. Electric vehicles also require silver in batteries, charging systems, and electronic components. Artificial intelligence infrastructure, data centers, military systems, and telecommunications all rely on silver in ways most people never think about. Now combine that industrial demand with rising investor demand, and you begin to see why some analysts believe silver could face a major supply imbalance over the next several years. In simple terms, the world may need more silver than miners can realistically produce. This is why the recent COMEX stress matters so much. It may be the first warning sign that the paper silver market is struggling to keep up with growing physical demand. If inventories continue tightening while industrial consumption rises, confidence in paper contracts could weaken even more. And once investors start doubting the system, demand for physical metal can increase rapidly. There's also another hidden factor many people overlook. Central banks around the world have been aggressively buying gold in recent years. While central banks do not typically buy silver directly at the same scale, their actions reveal something important. They are preparing for a future where trust in fiat currencies may weaken further. If governments themselves are increasing precious metals exposure, private investors naturally begin asking questions about financial stability. At the same time, geopolitical tensions continue rising globally. Trade conflicts, wars, sanctions, and supply chain disruptions all create uncertainty in commodity markets. Silver mining production is concentrated in specific regions, and political instability can quickly impact supply. Any major disruption to mining operations could tighten the market even further. This growing list of pressures is why some longtime silver analysts believe the current setup is unlike anything seen in decades. They argue that silver prices today still do not reflect the true reality of physical supply and future demand. If they are correct, then the market may eventually experience a dramatic repricing event. Now, of course, predicting exact silver prices is impossible. Some analysts make extremely bold predictions, claiming silver could eventually reach hundreds of dollars per ounce in a major monetary crisis. Others remain more conservative, but still expect significant upside over time. What almost everyone agrees on, however, is that silver volatility can become extreme once momentum builds. And history supports that idea. Silver has repeatedly shocked markets with sudden explosive rallies. During previous bull markets, silver often outperformed gold by a large margin in percentage terms. The reason is simple. Silver markets are smaller, tighter, and more sensitive to supply disruptions. Once buying pressure intensifies, prices can move very aggressively. The biggest question now is whether the current COMEX situation becomes the spark that ignites the next major silver rally. Because if physical demand keeps growing while paper confidence weakens, the silver market could enter a completely different phase from what investors have experienced over the past decade. And in the next part, we'll explore why ordinary investors are suddenly rushing back into silver and what this could mean for the future price of the metal. Something very interesting has started happening among ordinary investors, and it may become one of the biggest drivers of the silver market moving forward. More people are beginning to lose trust in traditional financial systems. Stock market volatility, banking fears, inflation, and rising living costs are causing investors to rethink where they store their wealth. As uncertainty grows, silver is once again entering the conversation as a form of protection and opportunity. During previous economic crises, investors often turn toward gold first because it has historically been viewed as the ultimate safe haven. But silver tends to attract attention later in the cycle because it offers greater upside potential. Since silver prices are much lower per ounce compared to gold, many smaller investors see it as a more affordable way to enter the precious metals market. This growing retail interest matters because physical silver markets are surprisingly small. Unlike stocks, governments cannot simply create more physical silver with the push of a button. Supply depends on mining production, recycling, and existing inventories. When demand suddenly increases, shortages can appear quickly. We already saw signs of this during previous silver buying waves. Dealers experienced inventory shortages, premiums increased sharply, and delivery times became longer. Even when paper silver prices appeared stable, physical buyers often paid much higher prices to secure actual metal. That disconnect showed how fragile the market could become under pressure. Now, many investors fear the same situation may be developing again, but on a potentially larger scale. If institutional buyers, industrial users, and retail investors all compete for limited physical supply simultaneously, the market could tighten dramatically. This is why analysts are watching COMEX inventory data so carefully. It provides clues about whether physical supply stress is growing behind the scenes. Another major factor supporting silver is the changing attitude toward long-term debt and currencies. Around the world, governments continue borrowing enormous amounts of money. Interest payments on debt are rising rapidly, and many economists warn that the global financial system is becoming increasingly unstable. In environments where debt grows faster than economic productivity, currencies often lose purchasing power over time. This is one reason precious metals continue attracting attention. Gold and silver cannot be printed by central banks. They are tangible assets with real-world scarcity. Throughout history, during periods of monetary uncertainty, people repeatedly return to precious metals as stores of value. At the same time, younger investors are entering the market with a completely different mindset. Many no longer fully trust traditional financial institutions after witnessing repeated banking crises, inflation shocks, and market instability. Social media has also accelerated awareness around silver investing, allowing independent analysts and investors to share information faster than ever before. This growing awareness could become extremely important in the years ahead. The silver market is not prepared for massive waves of global investment demand. If even a small percentage of investors decide to move part of their wealth into physical silver, supply pressures could increase very quickly. Now, none of this guarantees immediate price explosions tomorrow morning. Markets can remain volatile and unpredictable in the short term. Banks and large institutions still hold significant influence over futures trading activity. Silver prices may continue experiencing sharp swings along the way, but the underlying long-term fundamentals appear stronger than they have in years. That is why so many experienced analysts believe the current COMEX situation should not be ignored. It may represent an early warning signal that the balance between paper silver and physical silver is becoming unstable. And if that imbalance grows larger, the market reaction could eventually shock investors worldwide. The silver story today is no longer just about speculation. It is about industrial demand, global debt, inflation, investor psychology, supply shortages, and trust in financial systems. All of these forces are colliding at the same time. And when markets face this kind of pressure, major changes often happen suddenly and without warning. As we wrap up today's video, one thing is becoming increasingly clear. The silver market may be approaching a turning point that could redefine how investors view physical precious metals for years to come. The recent stress inside the COMEX silver market has exposed deeper concerns about supply, paper contracts, and the future stability of the financial system itself. For decades, the paper silver market operated with relatively little attention from ordinary investors. Most people trusted that the system would continue functioning normally forever. But today, growing physical demand, industrial expansion, shrinking inventories, and rising economic uncertainty are causing more investors to question whether the balance between paper silver and real silver can hold indefinitely. At the same time, silver's importance to the modern economy continues growing rapidly. The world's push toward clean energy, electric vehicles, advanced technology, and AI infrastructure is creating massive long-term demand for silver. Yet global mining supply is struggling to keep pace. This imbalance alone creates a powerful long-term argument for higher silver prices over time. Then we add investor demand into the picture. Inflation fears, currency concerns, rising debt, banking instability, and geopolitical tensions are pushing many people toward hard assets once again. Silver sits in a unique position because it combines industrial necessity with monetary value. Very few assets in the world offer both at the same time. That's why the current COMEX silver crisis has captured so much attention. Investors are starting to realize that if physical silver becomes increasingly difficult to source, the paper pricing system could face serious pressure. Whether this situation develops into a full-scale market event remains uncertain, but the warning signs are becoming harder to ignore. History has shown that silver can move quietly for years before suddenly exploding higher in very short periods of time. Most people miss these moves because they happen when confidence shifts unexpectedly. By the time headlines everywhere begin talking about silver shortages and soaring prices, much of the move may already be underway. This is why staying informed matters so much. Understanding how the silver market works, following physical demand trends, and paying attention to inventory movements can help investors make smarter long-term decisions. The world economy is changing rapidly, and silver may become one of the most important assets to watch in the years ahead. If you enjoyed this breakdown, make sure you subscribe to Pulse of Silver and turn on notifications so you never miss our latest updates on silver markets, precious metals, economic trends, and major financial developments shaping the future of wealth. Let us know your thoughts in the comments below. Do you believe the COMEX silver market is facing a real crisis, or do you think the system will continue holding together? Your opinion matters, and we'd love to hear your perspective. This content is created for educational and entertainment purposes only. Nothing in this video should be considered financial advice, investment advice, or a recommendation to buy or sell any asset. Silver and precious metals markets can be highly volatile, and prices may rise or fall unexpectedly. Always do your own research and speak with a qualified financial advisor before making any investment decisions. Every investor's financial situation is different, and you should never invest money you cannot afford to lose. Thanks for watching Pulse of Silver, and we'll see you in the next video.